Welcome back. Tech stocks dominating 2024, heading for a second straight year with double-digit gains. And our next guest is betting on even more upside for some of the group's biggest winners. Joining me now, Baker Avenue Chief Strategist King Lip. And King, it's great to have you on here. I have to tell you, though, it's been a parade of investors coming on here and saying, you know, big tech has had its moment. It's really time for money to rotate into other themes, smaller stocks, things that aren't so popular. It seems like you're not on board with that idea.
Yeah, Mike, it's great to be with you. We'll take the other side of that trade. And the reason why is, let's just say the recent weakness that we've seen in the tech sector. We think a lot of that just has to do with rebalancing. We don't see any fundamental reasons necessarily. We see it as more technical in nature. We think cash would go back to these winners simply because that's where the earnings growth is in 2025. If you look at the tech sector, it's still looking to be the highest sector for earnings growth with over 20% expected in 2025.
Right, although I guess the argument is that the rest of the market is also going to have a big catch-up move in earnings. And I guess maybe it's true that this is mostly technical or repositioning and nothing much has changed. But once you get these very large stocks up to 32, 35 times forward earnings, maybe that's kind of enough reason for people to reassess.
It could be, and we're not bearish on the other, call it 493 names either. We're expecting them to deliver somewhere around 13% earnings growth in 2025, but that's still, going to be below that of what the tech sector is expected to deliver. Having said that, we don't think valuation is out of line. In fact, if you look at the Magnificent Seven stocks, their valuations are within one standard deviation of their historical norms in the last 10 years. So it's hard to say that they're at levels that are not sustainable. In fact, if you go back to a lot of these companies, going back to their IPOs, it's not unusual to see these companies deliver multi-year strong gains, simply because that's where the earnings grow.
Our final trade yesterday, we talked about Nvidia on unusual option activity. Today, we're going to talk about it again today. But yesterday, they were buying the January 140 strike calls in there. They bought thousands of those, over 50,000, I believe was the number. But today, stock's down about 2%, still up over 170% so far this year. But I think somebody thinks that some gains are going to be capped. This was out in the January 10th weekly cycle. So just about 10 days till expiration on this one. Traders sold over 50,000 of a call vertical. They sold the 50,141 strike calls, and then they bought 50,000, the 149 strike calls. So a short $8 wide call vertical to the upside. They collected a credit on average of about $1.48 for this $8 wide call vertical. That takes a break even where they start to lose money up to 142.48 over the next week and a half. That's about 6% above the current share price. So somebody thinks that the stock's going to remain consolidating or even lower. This has been the underperformer in the Mag 7 so far in the month of December, but somebody taking a shot here, but they did stay risk defined. So even if the stock does go above 149, they know exactly what their potential loss is. You see that right there. They collected $1.48 on over 50,000 of those call verticals in Nvidia.
Well, no, there's no doubt about it. I mean, almost across any time period, just the NASDAQ 100 has been a remarkable source of returns. Most interested in some of your specific plays, and especially ones where you're essentially doubling down on an already great year, like a Broadcom. Feels like that was a story everybody embraced recently, had a huge gain in market cap. Why can it keep working?
Well, first of all, it's a wonderful company managed extremely well by Mr. Hock Tan. I think Broadcom is an interesting name just because it does something that NVIDIA doesn't do, which is custom AI chips for their customers. This segment is growing just as fast as NVIDIA is, and the company itself actually has a lower multiple than NVIDIA. Companies like Palantir also look interesting to us. It's controversial because it sells at a very high multiple. We recognize that. But the company just became profitable just 2 years ago, but it's been cash flow positive. We think it's uniquely positioned in the incoming administration. Peter Thiel was a founder of Palantir, obviously a connection with Elon Musk there. And with the Doji efforts that are coming in to reduce government expenditures, we think Palantir is really uniquely positioned.
I mean, clearly that is the collective conclusion of the market, that Palantir is in some kind of a privileged position that's gone vertical since the election. You mentioned the valuation issues. I mean, it's above 50 times revenue at this point. There's been lots of, top insiders selling shares into this ramp. I mean, why doesn't any of that give you pause at this point?
We'll be hesitant in terms of being buyers today. If it does pull back, say, to the mid 60s, it would be a lot more attractive to us. But given how volatile these stocks can trade, we think the opportunity is there for investors to participate in a name that's going to be, in our view, a big winner going forward. And also keep in mind, if you look at past winners in terms of multi-baggers, if you would, a lot of these names have sold at tremendous high PEs before they had their big runs. So I think sometimes the market underestimates the earnings growth of what these companies can potentially reward investors with.
Yeah, I mean, clearly that's what a buyer around these levels would be betting on. Talk a little bit about Nvidia. I mean, you mentioned why Broadcom might have certain advantages, but Nvidia has been a very fascinating case because it built up all these massive gains in the first half of this year, and it's basically held on to those levels, but it has not been able to make further progress. What do you think's behind that?
I think a lot of that is just about expectations. If you look at multiples, Nvidia, again, now sells for roughly average forward PEs of the last 10 years. I think investors are sort of waiting and seeing how the next earnings report will look like. We expect the company to continue to grow, just not at the rate that we've seen the last 2 years. So I think investors are kind of this wait and see period for Nvidia.
Yeah, I've been waiting for a few months. We'll see if there are catalysts on the way. King, great to catch up with you. Thanks very much. Appreciate it.
Take a look at, I think everybody's heard of this one. That's Nvidia. Big gains here in 2024. It's taken a little bit of a pullback, nearly 10% from those all-time highs that we saw just over a month ago. What do you got here for us in Nvidia?
It has stalled out here a little bit, but the bullish trend is still intact. As you kind of talked about, we've seen a nice run over the last year when it comes to the stock. And now we are starting to see a little bit of a battle when it comes to the 20-period moving average, which is going to be in blue. Now, the first area of support that you would like to see is $129. That actually has some confluence to previous areas of support, as well as that upper trend line or that channel line. That bottom support line there is pretty much hitting that 129 level as well. So you'd like to see some buyers stepping in. And if not, if we do see a break, 120 is going to be your next area of support. That's around where the 200-day moving average is. And you do not want to see any type of break below that, Tom, because that point of control, which is in red on that volume profile, is sitting at around $89.86. Now, the RSI is making lower lows as well as lower highs. So this pullback that we've seen is actually being complemented by that momentum indicator. And we also have that MACD, which is trying to cross higher. That 12 EMA did actually cross above that 26 EMA, but it's still below the zero line, which is still bearish. But that's something to kind of being mindful of. Any type of push to the upside here, you can look at 150 being your area of resistance. You and I know we watch options flows literally every single trading session. And there's still a lot of confluence or a lot of trading activity at that 150 level when you're looking at individuals selling calls against their long stock portfolio here. So a pullback for now, consolidation for now, bullish trend is still intact. Any type of break between those, below those support areas I highlighted would be a cause for concern for shareholders. Yeah,
and Nvidia had some support over the last couple of weeks around that 130 level, which was a 100-day moving average. I typically don't look at that one, but it acted like a good area of support, still just above 130 for that 100-day moving average. But when you look at this one, Jensen Huang, he gives a keynote on January 6th at the CES conference. He's typically pretty bullish on this one. How do you want to look at this one from an example trade?
Once again, the fundamentals for NVIDIA is still intact here, and obviously any type of commentary come from the company or their leadership is going to be probably bullish for the stock. And you can also make the case here, Tom, that it could be a defensive type of stock as well. We had that pullback in the broader equity market a couple of days ago, and actually NVIDIA was green on the session. So that could be another area to kind of focus on if you do believe that volatility might creep in. This could be a safe haven for a lot of traders here. So keeping that in mind, looking at the January 17th, 140, 145 call call spread here, buying the 140, selling the 145, doing this for a debit of $1.80. Now, the max loss on the trade is going to be the debit paid $180. Max gain on the trade could be up to $320 with a break-even point of $141.80. This is a stock, once again, that actually can move on an intraday basis. It's not out of the realm of possibility to see $4 or $5 moves within the stock. So that break-even point is definitely within reach when you're looking at this trade. Another flexible trade as well. If it does go into your direction, you could actually take the trade off before the time of expiration. And once again, we've seen some buyers really step in at these key areas of support. That 127, 129 level has been very critical. And even over the last couple of trading sessions, the 137 level has been an area where buyers have stepped in here, Tom. So trying to take advantage of an upside move, trying to take advantage of the potential seasonality dynamics of selling pressure in the broader equity market, and maybe investors looking at Nvidia as that safety trade. And if that is going to be the case, this could be a trade, an example trade that could profit from that.
Yeah.